as well. Now, is this recovery durable? That is the question on investors' mind across asset classes, across geographies. Let's ask Fook Heen, who's a senior investment strategist at Standard Chartered Bank. Fook, thanks very much for joining in. I'm sure it must have been a very interesting, last 24 hours for you as well. I was going through the note that you folks put out yesterday, when the dust had kind of settled. So just take us through the thought process. Now, I believe a lot of officials are supposed to be meeting in Japan now at this hour to take stock of the carnage. I think the first question is the worst of the yen carry trade unwind over? Is there more to go? And will we see another round of volatility?
Yeah, no, thanks very much. Thanks for having me. I think the yen, we've got a view that for dollar yen of around 146 in the next 3 months. We think it went down. It got close to testing 140, which was the low back in December 2023. So we think that is a support level, testing to the 140 level. It got close to there. So we think that would be the support level. So we do expect it to be a bit calmer at a 146, as I said, our view for the next 3 months. So a lot of it has been unwinding. We think positioning has been very much short of the yen. With the move from the Bank of Japan last week, there was a bit of a surprise. I think there's a lot of unwinding of the carry trade of the yen, where people have been borrowing yen and using that proceeds to invest in assets around the world. So that has been unwinding a lot in the past 48 hours, I'd say.
Fook, morning, Rima here. So what's the expectation for global equities for the next 3 to 6 months? Because your technical model had turned bearish on S&P 500 index for the first time in 2 years. And we saw the kind of sell-off over the last 2 or 3 days. What's the near-term outlook?
Yeah, thanks for that. I'm glad you picked that up. So you're right. First time in 2 years it turned bearish, and it's been a positive up until that point. So I think in the near term, I think in terms of the volatility and whether we see the bottom or not, I think we're still quite cautious there. But look, over 6 months, our view really is that we still expect global equities to outperform. What's going to be crucial really is whether the US can get a soft landing, whether it can get into a recession. Now, a lot of this, in my view, started after the non-farm payrolls, the employment data, unemployment ticked up. So there was a bit of weakness there. So we've seen soft landing pretty much expected by a lot of economists across the street. But when that data just raised the possibility and a repricing of whether we can actually have a hard landing, I think that is what is causing a lot of the tailspin in the market. Look, our view is that rates are very high at a 23-year high. There is scope for the Fed to cut rates. And as they cut rates, they can then extend the economic cycle and support a soft landing. So that is our core or our base case, if you like. And if the Fed is able to achieve that by cutting rates and extend the economic cycle, as they're focusing on growth, we do expect global equities to outperform cash over the next 6 months. So that is our view for next 6-12 months. We're still constructive. But in the near term, as you say, we look at our technical model and positioning, actually, that hasn't actually washed out yet. So we're still very cautious, expect volatility in the short term.
So one piece of the puzzle is the US and whether we get that soft landing or not, or if how the Fed responds. And we'll have to wait and watch, because I think everyone's anticipating now 100 basis points, if not more, rate cuts by the end of this year. So that's one part of it. Fook, to get back to Asia, now we all understand that no one can ignore large markets like Japan, right? I believe you've already closed out, your team has closed out the short USD yen sort of positions. Do you think the maximum amount of this yen surge, is that over, or should we be prepared for any other surprises for Japan? Because I don't know, I mean, can the BOJ suddenly change course? They hiked rates, they were talking about tighter policy. But would they suddenly change course just because the financial markets are freezing up?
Yeah, look, I think that the surprise last week was what really the market didn't like. It was 50-50 going into the meeting, and then they came out with the hike, raising rates to 0.25%. And the market really doesn't like the uncertainty. We think the signs are there that inflation is picking up, and that's why the Bank of Japan acted. And we think that the trajectory really is for further normalization of interest rates. I mean, 0.25% is extremely low rates. They has exited negative rates back in March. So look, we're looking at normalization of policy here. And why are they normalizing? Because inflation is picking up. there's reason why they're doing that. So we do expect that normalization to continue. I think in terms of the communication and how the markets are digesting it, that could take time. Whether the yen carry trade happens or not, look, I mean, there's a lot of different factors in there. As I said, our 3-month view is 146. So pretty much where the market is, we think 140 is a bit of a support. But if you look at the differentials in terms of the yield that you get on Japan versus US, yeah, I can see the arguments there. But in terms of the trajectory, we expect where the Bank of Japan is going to be raising rates compared to the US where they are reducing rates. I think that's a trajectory that we can expect where the differential will narrow.
Yep, absolutely. We're living in very, very interesting time where these two large central banks, powerful central banks, are moving in opposite directions. So let's see if we get to equilibrium or not on rates and what that means for global asset classes. Great conversation, folks. Thanks very much. And we look forward to having more frequent chats as we understand how central bank policy moves over the next couple of weeks. Thank you for joining in today. We'll take a break on that note. Coming up on the other side, we will be in conversation with Rajan Sethuraman of Latent View Analytics. So we'll talk about the company's first quarter performance and the outlook.